back. You're watching Eye on India. I'm Shereen Bhan, and we're discussing the year that was for M&A in India and what 2018 holds. Ajay, we were talking about one of the big themes that you believe is going to play out, which is the stressed assets theme. But the other big ticket item, and we don't know whether the government will develop cold feet or not as it gets closer to the election, is this business of strategic disinvestment. I mean, we're talking about Air India being on the block. The civil aviation minister says it could take another 6 to 8 months before they arrive at any kind of closure. But do you believe that that could be one of the other big triggers for the market?
Yes, I think the intent of the government on the disinvestment process seems to be very, very clear. And that could, again, drive domestic M&A to a large extent. And you could see a lot of Indian corporates and global players looking at some of these assets. So I think clearly disinvestment process would be another important factor that will contribute to the M&A activity in an incremental fashion next year.
Okay. And would that be of any interest at all to you, Dhanpal?
We don't think that's a sweet spot for us. There's a lot more to do in India rather than go and bid for government assets. I think, it's the devil is in the detail, right? How these assets are structured for a sale, because yes, a lot of the challenges in these businesses require literally not just band-aiding, but surgeries. And would government be comfortable with a process where someone can come in and conduct surgeries rather than just apply band-aid? So I think the issue is really that there is, like Ajay mentioned, there could be specific strategic interest. I think the government should be extremely open and constructive the way it handled the first disinvestment process sometime in the early 2000-2002 period, where you saw a significant amount of strategic interest come in.
Yes, in the first NDA regime.
Yeah. Absolutely. So I think if they're willing to make some bold moves and take decisions on that basis, I think there could be definite strategic interest in this disinvestment process.
Well, we are yet to see that play out. We haven't seen a single strategic disinvestment take place since this government first spoke about it, and this has been an area of disappointment. But Anil, let me ask you, because you've started the process of integration with Lloyd's. For someone who is looking at a potential acquisition, what are the challenges that they must keep in mind when it comes to integration? Because that could, in a sense, play spoiler.
I think one of the biggest things, obviously, a lot of things can be looked at while doing the acquisition, the due diligence process, the financials, the legals. I think one of the key things that we've taken as a learning in our large acquisition of Sylvania and now Lloyd, is how culturally integrated is the team, and how do you bring them into the culture of the organization. I'm a firm believer in this fact that an organization cannot have two cultures. Yeah. Right. So when we acquired Sylvania, we looked at various markets. We were present in 50 markets, and everybody talked about a country culture, and we talked about a company culture. We said within Havells Sylvania there should be one culture. Yeah. And that integration helped us see the global financial crisis times, and we came out of it very quickly. We retained the company to be profitable. And the same thing we are doing in Lloyd as well. So the entire team which comes in, the distribution team which comes in, the channel which comes in, how culturally they get integrated into the organization, I think that's where the entire senior management focuses on. The rest of the staff, the IT integration, the financial integration, the HR integration continues to happen, and that's a process. However, I think for us, the key learning is that we need to culturally integrate the organization. And we believe that we've been very successful, first in identifying that Lloyd was the right target, that it could be culturally integrated, and now we are in the process of doing that. Okay.
Cultural assimilation and cultural integration is one very crucial aspect of ensuring that M&A works. But Dhanpal, in terms of financial structuring, what is it that you've seen in 2017, and what do you expect? And also the question on valuations and where they're headed.
So if you look at on the acquisition front, I think one of the key elements around making the acquisition work for you is really making sure as to how you plan a transition and how do you plan implementation of that transition. We are very, very focused when we do diligence and when we look at buying assets on making sure the management team, which is either coming along with the acquisition or which is being infused into that asset, is completely aligned with what we as a shareholder want to do with the business. And that alignment has to happen even before the deal is complete. And that alignment happens not just at a strategic level, but there is a very detailed 100-day, 300-day, and 1,000-day roadmap which is chalked out, which is signed up and literally is something that both the management and the owner that we work together to execute and deliver on. Coming to valuations, I think, clearly we've seen a significant, I would say, expansion of multiples across pretty much all types of sectors and asset classes. I think the issue with that is that it makes it that much more difficult to justify the returns that we can make, and it requires a lot of growth, I would say, and a lot of operational efficiencies to be built into the businesses that we buy. So you obviously are going to see, I think, some trade-off in terms of returns against what you would typically want is a high-quality assets that you would want to pursue and own. So, but I do think that quality will definitely trump valuations, and I think that would be the basis on which most deals would happen.
Okay, quality will trump valuation. Ajay, as far as 2018 is concerned, which are the sectors that you believe we're going to see maximum amount of interest and activity? And what's your take on whether quality will trump valuation?
From a sector standpoint, financial services was big this year. I think that will continue to be a big part of the deal activity next year. You would probably see technology again and e-commerce being very, very active. E-commerce more consolidation, technology more outbound and to some extent inbound. On the consumer side, we're going to see continued deal activity, I think largely inbound and domestic, and private equity is obviously pursuing that sector quite aggressively. These could probably be the 3 or 4 key sectors. In addition to that, on the infrastructure side, clearly renewables is seeing heightened levels of activity, and both consolidation and private equity raise will be big in the coming year. You can say the same about roads, which will probably see a lot of consolidation, and real estate will probably attract a lot of capital, and not to mention themes like InvITs and REITs playing out. You've had success this year with a couple of offerings.
Finally,
and probably that'll be important. Finally.
Yes, we've spent many months talking about the possibility of that. So maybe 2018 will finally see that take off. Right. But Anil, I want to end by asking you. We've been talking about the M&A story, but let's talk about the demand story. And does 2018 look any better from a demand point of view? We've had the double whammy of demonetization and GST in 2017. We're still grappling with the pain of both those issues. From a demand perspective, do you believe 2018 is going to bring better news?
Absolutely. I think I'm very confident and hopeful of 2018 being much better because, the short-term pains that we had because of demonetization and GST are actually structural changes. Whenever you make a structural change within the company also, it will have short-term pain. But obviously, you're doing it for the betterment of the economy or betterment of the company. Similarly, I believe that both these actions definitely are going to help the consumer story, the demand story in the country. And hence, I'm very hopeful that 2018 will be a much better year.
Will be a much better year. Dhanpal, I'll give you the final take. We've seen total PE exits in 2017 through IPOs, about 18, which accounts for almost $2 billion, which is the highest ever. Do you think exits will continue to be a big theme in 2018?
I think there is a very clear demand from, I would say, investors. And this is partly driven by a shift from physical to financial assets for quality offerings. And I think, therefore, from a demand perspective, we do believe the capital markets will continue to offer significant opportunity to generate liquidity and exits for the private equity industry. From a supply side perspective, I think everyone will be keen to try and, there's nothing on the horizon, really. There are no clouds on the horizon right now. The only real event which is going to be there is the 2019 elections. So my view is that anyone looking to raise capital, anyone looking to generate liquidity will use 18 as a year to try and do that.
Okay, no clouds on the horizon just yet. Bite your tongue, gentlemen. We've seen things turn and turn very, very quickly. But it's been a great year, at least as far as the private equity M&A space is concerned in India. Overall, it's been subdued on the M&A front for the year that's gone by. But 2018 should bring better news, and the domestic story will be the one to watch. Anil, Dhanpal and Ajay, appreciate your time. Thanks very much for joining us here on Eye on India. With that, it is time for us to wrap up this CNBC-TV18 special from all of us here. Goodbye. Many thanks for watching.